So good day everyone. I am Shaira Grava and our topic for today is the money and banking. So our topic objectives is first is defining money by its function. Second, measuring money, currency M1 and M2. Third is the role of banks, and lastly, how banks create money. So did you know that long ago, people used cowrie shells from the ocean as money? So this started around 700 BC in places like China, India, Africa, and later on Europe. So cowrie shells were strong and didn't break easily. So it's hard to fake and good for preventing scams. So it's easy to count and rare, so they keep their value. So who controlled the supply of cowrie shells? So it's the colonial powers like the Portuguese, Dutch, and English. So cowrie shells were used until the 20th century in some places. So now, money exists in many forms like cryptocurrency, like bitcoins, and etc. So for example, back then, instead of using coins or bills, a person could buy rice using 10 cowrie shells. So, money and function. So, money is what we use to buy things and pay for services. So, barter. So, this is trading one thing for another thing. So, it's a direct exchange for goods or services without using money. So, for example, you give a fish exchange for rice, or in exchange for a piece of land, you give a TV to that person in return. So, when we say double coincidence of wants, so this means both people must want what the other person has and willing to trade. So for example, you want your neighbor's mangoes, and your neighbor wants your rice. So that's a double coincidence of wants. But if your neighbor doesn't want rice, so the barter can't happen. So in short, barter is the actual system of trading. So double coincidence of wants is a condition that must happen for barter to be successful. So in short, ang double coincidence of wants ang pamaagi para naay barter nga mahitabo. Then kana na process gitawag siya og barter. So medium of exchange is the money we use to buy things. So, for example, you buy bread with money. So, store of value is anything that keeps its value over time. So, you can save it now and you may use it later. So, you don't have to spend your money right away. So, pwede ra jud siya kanang i-keep and useful gihapon siya in the future. So, for example, na kay 500 pesos karon. So, pwede nimo na i-keep for a week, month, or even years and still be useful to buy something later. So, when we say unit of account, ang unit of account kay like ang gamit sa kwarta para ma-compare ang kantidad sa butang or service. So, we use money para mahibaw ang pila ang presyo ana na butang. So, for example, nakay burger nga tag 100 pesos. Nya din ang cellphone is tag 5,000 pesos. So notebook kay 150 pesos. So tunod kay gamit na to ang peso as unit of account, sayo na nato ma-compare ang price. So if wala unit of account, lisod kaayo isab ka ng masabot ang kantidad sa mga butang, like for example, so sa duha ka burger makapalit kag isa ka t-shirt. So mas nice jud nang naay kanang like naa jud tay gibasihan ba nga money or kanang unit of account para dali na jud nato ma-compare ang kantidad without like murag kuan like sa duha ka burger makapalit kag one t-shirt nga na. So standard of deferred payments. So this means we can use money to pay later and both sides agree on its value. So perfect for loans, utang or installments. So example na kay ay mobile ka og kanang cellphone unya imuharang bayaran every month og 2K. So types of money. So first is commodity. So when we say kanang commodity, so the item has value on its own. For example, gold, silver, and cowrie shells. So it has value kanang even without being used as money. So when we say commodity backed money, is paper money is backed by a real good. Example, gold, silver. So it can be exchanged for valuable items like gold or silver. So fiat money, so it has value because of government trust and people believe its worth. Like paper bills and coins. So if the government says paper bills kay walay value, then it has no value. So money that has no value on its own. So durability. So commodity, so durable but can wear out or easy to lose. Then ang commodity backed money is durable siya if stored properly. So fiat money or it is highly durable because modern paper or plastic money lasts longer. So ang flexibility nilang tulo is first, ang commodity is not flexible. So it can be heavy or hard to divide. Ang commodity-backed money is more flexible than gold but still limited to physical supply. So fiat money is very flexible, so easy to carry and divide and use. So ang stability. So ang stability nilang tulo is first, ang commodity is value changes with supply and demand, so price of gold. So ga base ni siya sa changes sa supply and demand. Then ang commodity backed money is more stable since it tied to a physical commodity. So fiat money can be unstable or valuable depends on government control and inflation. So stress factor. So commodity money is the people trust the value of the item itself. So ang commodity money is kanang the item itself jud siya ang value. So ang commodity backed money is people trust they can exchange it for real good. So mura na siya commodity backed, so na jud na siya kanang value in exchange for real good. So ang fiat money is people trust the government and the economic system. So modern use. So commodity is really rarely used today. So ang commodity backed money is no longer widely used. Then ang fiat money is used every day today. So the fourth slide is the kuan. So first is M1. So M1 is the money that can be used immediately for spending. So example, cash or currency, mga coins, bills, and etc. So second is checkable deposits. So example, money in your ATM. So bank accounts that allow you to write checks or use debit cards. Then ang M2 is a broader measure of the money supply. So it includes kanang mga everything in M1 plus money that is less liquid. So it takes more time or steps to use. So, for example, deposits, money market funds. So in short, ang M2 is a hassle because it is not ready to use money. So it's good for saving, but it's not for spending quickly like M1. So M1 is kanang liquid and the M2 is less liquid because M1 is easy to use money. We can use it directly, and the M2 is kanang hassle since napay mga kanang mga perma and etc. Then, so this slide shows how we measure the money supply in economy using two main categories. So M1 and M2. Again, M1 is coins and paper deposits, checkable deposits, or savings deposits. So M2 is everything in M1. So include na siya mga cash and etc. So money market funds like kanang pool saving accounts with interest. So mga certificates of deposits, money you lock in the bank accounts for certain time. Then other time deposit is money that is not very kanang easy to take out immediately. Then lastly, last slide is so the debit card. So when we say debit card, so it uses your own money discreetly from your bank account. So directly dyan makuhaan imong bank account. For example, mga BDO, but BPI. So it depends on the amount of your bank account. So when we say credit card, uses the bank money to buy things and pay later. So it's a loan you must pay back. So can have interest if not paid on time. So ang kaning credit card is limited na ni siya nga gihatag. So you kanang pwede nimo ma-borrow and then pay later of na kay money. So ang debit card is kanang mao ni siya nga kanang card nga kanang makuan ditso imuhang kwarta sa bank accounts. So gadependre ni siya sa imuhang card mismo nga pilay na as ay sud adto. So kanang smart card, so it stores a set amount of money and can be used only for specific purchase. So for example, transport cards or campus bookstores and payments.